All right, good morning, everybody. Good morning, good morning, good morning. If you can hear me loud and clear, just kindly go in the comment section and give me a 1. Type the number 1 on the comment section. If you can hear me loud and clear. All right, amazing. I see you, Samira, Angela, Praise. Okay, thank you very, very much for this, for your feedback. All right, I appreciate you. Okay, good morning, distinguished colleagues and partners. On behalf of the partners and team of SAC, I welcome you to this high-level webinar titled Ensuring Financial Compliance for Donor-Funded Project in Nigeria. This webinar is part of our firm's continuing strategic advisory engagement with the non-profit sector, aimed at equipping NGOs with the clarity and tools needed to meet today's elevated standards of financial accountability. Now, NGOs remain critical to the development landscape, bridging service gaps, supporting vulnerable populations, and driving innovations in health, education, and livelihood support. Yet, in our engagements with the NGOs across Nigeria, one recurring theme has become clear. Financial compliance is increasingly defining credibility and funding decisions. Donors today are not only looking at programmatic success, but at financial stewardship, internal control frameworks, and regulatory alignment. Our experience has shown that many NGOs, despite their operational excellence, fall short in key compliance areas, such as late or inaccurate filing of CAC and FIRS returns, poor documentation supporting donor fund financial reports, misalignment with financial reporting standards framework, weak audit readiness or delayed project closeout processes, insufficient training of finance teams on donor-specific cost eligibility rules. Now, these gaps are not merely technical. They result in delayed disbursement, suspended projects, reputational risk, and in some cases, total exclusion from future funding opportunities. Now, at SAC, we believe that compliance should not be reactive. It should be institutionalized as a strategic function. And that is what this session is designed to support. So to address these specific compliance gaps we have identified, we have invited speakers whose expertise directly responds to these needs. Each speaker brings a practical perspective and proven experience that align with SAC's commitment to equipping NGOs for improved financial accountability, regulatory compliance, and donor confidence. Their contributions today are intended not just to inform, but to offer actionable insights that can help mitigate risk and institutionalize financial discipline within your organization. So the first I'll be introducing is Ms. Wumi Adelusi, a seasoned development finance advisor with deep experience in donor-funded programming and non-profit financial system. She will set the context for today's discussion by highlighting the realities, pain points, and opportunities facing NGOs in Nigeria's donor landscape. All right. And then also we have in our midst Alhaji Mustafa Sirajo, a well-respected regulatory and legal expert, bringing critical insight into compliance obligations under the Companies and Allied Matters Act and the Federal Inland Revenue Service. Also, his session will focus on regulatory obligations and filing requirements specific to NGOs. And finally, we have in our midst Dr. Deji Adeshile, a widely respected professional in finance reporting and governance. Dr. Deji will actually be addressing the core reporting standards and compliance expectations from donors, including IFRS, FRC, and internal control mechanisms tailored for the non-profit sector. So we have shared the professional profiles of our speakers across our LinkedIn and other social media platforms, and we encourage you to take a moment to view their backgrounds to fully appreciate the depth of expertise they bring. We will conclude this session with a Q&A segment, which I will moderate, and where we will further explore key concerns and practical issues raised by participants. So kindly indicate your questions in the chat box, as the session is for 90 minutes. Okay, once again, thank you for joining us, and we trust this session will deliver clarity, confidence, and capacity to all participants. So now let's begin with Mrs. Wumi Adelusi. Are you there?
Yes, I'm with you. Can you hear me?
Loud and clear.
Excellent. Thank you very much, Raphael. So are you going to put the presentation up? Okay, thank you very much. Okay, good morning, everybody. And thank you so much to SAC team for having me. Thank you to Mr. Shegwa Osanya. It's good to be back home, I would say. So thank you so much. And thank you to Raphael and Dam. Excellent coordination all along. It's really an honor, to be here to speak. This topic is very important. Important, not just in terms of solving the developmental challenges, but also because the funds are not rising at a pace that is catching up with the needs that exist. And so there's so much need for efficiency in terms of the utilization of these resources and getting the best of the value. But you see, most times what the institutions are able to attract in terms of funding is a reflection of the institutional capacity as well. And that is one of the things that we'll be talking about in terms of what do these donors actually look out for, and how can NGOs do better in terms of compliance. Now, you might ask and think, okay, why am I even here as an institution, or why is this discussion really relevant to you? And I think that it's very important, because if you're able to do better as an institution, then it's not only for your good, but also in terms of the development goals to achieve through the funds that is channeled through your institution. And so it's really an important conversation that we're having this morning. And I think I would also start by setting the context in terms of the trends we are seeing in the donor funding space. And like I've been introduced, I started working in the development space core about a year ago. And in that 1 year, I've learned a couple of things. And I've also seen some things that we would often take for granted, and one of which is compliance. And so in the agenda, I've laid out some of the things we'll be talking about in terms of the landscape, in terms of what the donors expect, why it's important for you. We often say that when the purpose of a thing is not known, abuse is inevitable. And how can we strengthen some of those controls? What are those standards? Sometimes it seems like the process to compliance is so, but like someone said, you think compliance is expensive, try non-compliance, right? And so we'll move from there. And it's also important that we bear at the back of our mind how there's been a bit of shift for donor funding in terms of the geopolitical tensions, the evolving and changing dynamics of things. You see things more like climate change in the donor funding space. And so we'll get to those areas. But I thought it was important for me to share with you, what could happen, or what the statistics is saying in terms of global. And some of these challenges are not peculiar to Nigeria. I've spoken to people in Nigeria and outside Nigeria, and then I've also spoken to some health related NGOs, and you find out that this situation is not only peculiar to maybe a certain sector, it cuts across. And this slide is essentially to show us some of the things that have happened, or the consequence of lack of how only 40% of NGOs in sub-Saharan Africa use proper accounting system. This is one of the things we check out for, my employer looks out for when trying to engage any institution. They want to see what your accounting process is like, the kind of softwares you're using, how sophisticated are those softwares, and, in terms of segregation of duties, which we'll come to talk about as we move along. Please, can we go to the next slide? And so when I was researching for this topic, I thought, oh, let me even see one of the most famous scandals that have happened, in terms of donor funding space and then non-compliance. And this one is very popular, the Global Fund. They are known for challenge related to health in terms of tuberculosis, resulted in about 30. Really, it was one of the things they found out from that audit report was as and this seems very well it seems very minute, right? It's not like, oh, someone stole some very heavy money or there was budget padding, but you could see that what actually led to the loss of this is as a result of weak, accounting processes, weak reporting processes and compliance processes. And it's not only the Global Fund, there are lots of them across the globe. Now, when we're talking about donor funds, there is one of the areas when it comes to compliance is audit delays, right? And I'm trying to lay this context so that we understand peculiar to just Nigeria or to a certain sector, like I highlighted earlier. It's something that cuts across. In Indonesia, for example, audit reports, they observed that about 30% of audit reports were received 1 to 3 months late, right? In the World Bank project, about 42% of audits that were due were not received at the time they were supposed to be sent in. And that's to tell you that when audit reports are not even sent in, then you cannot make the plans for the new year in terms. Let's go to the next slide. Now, why do donors really require this financial report? And I think that this is understand some of these donors that we see, they are actually pulling resources from multiple funds. So for example, I'll use the World Bank again as a case study. In the World Bank, there are some projects that some trust funds that are gotten from other trust funds, but because the World Bank is, globally recognized and known, and it also has its own very strong institutional corporate governance principles, some of these trust funds will rather channel their finance, their resources through the World Bank to then disseminate to the, eventual or implementing agencies. And so in that kind of scenario, the World Bank would need reports to actually give to those donors in terms of the commitments that were made, and then they can measure the accountability and how far they've gone in terms of achieving the milestones. And so your donor does not only require the report for themselves only, but even for their own donors as well. So it's more layer kind of reporting. And so your donor requires this financial report, for maintaining the trust, to demonstrate to their taxpayers. In fact, there are some example that is sponsoring, oh, I just want to see how remittances behave in Nigeria and how it's tied to financial inclusion, or particularly for women in rural areas. They will put that fund, pull it across people that are interested in that kind of target, and then they can channel it through institutions like the World Bank or FSD and Africa, etc. And then they give them. But what is expected from them is also then for them to, present a report. So your donors need this to show accountability, to show transparency to their governments, to their taxpayers and philanthropists. Also, in terms of performance monitoring, financial reports always provide how well a project is progressing. It gives you the indicators in terms of the reach, in performance, and how it's been leveraged, the outreach, the efficiency. Another thing is about the decision making. So we have some projects that you think, oh, this project at the conception stage is not looking things. Now, if there are no reports, there's no way they can, take the learnings as to whether they need to scale up the funding or maybe it needs to be restructured. I mean, there are some projects that are achieving the purpose and maybe to next here and there. But these are the things that having a financial report as an NGO would help your donor to do. Evolving trends. They can see, oh, maybe initially we developed a fund for agricultural finance, or we developed a fund for climate, and now we are seeing that renewable energy is where the needs are at. How do we rechannel? How do we restructure this financing to actually meet the need? So these are some of the things that the financial report would do. Value for money, for example, is another point. The thing is with institutions, international institutions, they are very keen on, oh, if I'm giving you $1, how much are you able to generate with that $1, right? And we refer to it as leverage. So how much of private capital can you actually mobilize? So I'm giving you that $1, but I know that it's not going to solve the problem, but I hope that it can actually catalyze and galvanize even more funds to solve that problem. And these are the things that financial reports in donor funding your donors with. Let's move to the next slide, please. Now, to you as the NGO, why does it matter? And some of these things we probably already know. So it's a legal and regulatory requirement, and I'm glad that there's also on tax do it to maintain your license, to maintain your CAC status, etc. You need to comply. Also, it's required internationally. It makes you even more credible. People want to be associated with you because when you have reporting, then what you're saying is that your house is in order. Another reason why it's important is for transparency. Excuse me, is for transparency in terms of the trust and credibility. So you notice that, oh, when you have even us as individuals, you want to invest in a company. One of the things you're looking at is, oh, what's their financial saying? What's their track record? How much profit have they made over the years? How were they able to utilize it? Or even if they've not made profit, are they breaking even? How are they channeling their resources? What are those investments they have? What are the capital expenditures? So those are the things that when you have your financial records in order, it also, shows to the outside world, to your external parties, that you're credible, you can be trusted with resources, and it shows that you want to be accountable, right? Especially if you have of directors that you account to, how you even measure your performance internally also and plan for the next year is through your financial reports. Also, in terms of, you are able to know areas where there is waste. You're able to know areas where you can do better. Perhaps it's in your advanced management to, create efficient systems that serve you and also serve your clients. And also in terms of planning, right? When you'll be able to know, okay, this is where we are, this is what we are targeting this. And later in the discussion, I will share some of the evolving risks and trends that the global bodies or policymakers are thinking of, and how that can even shape the direction and the flow of funds that we see. So we shouldn't just see compliance as, oh, is a thing that I need to do to just tick the box or survive. It's also a means to an end for you in terms of having a sustainable structure and sustainable practices, and to attract multi-year partnerships. Can we go to... So now let's talk about the practical challenges, right? When we are talking about some of these issues, and I was at an assessment with a proposed implementing agency, and I was there, and they were asking a lot of questions. We spent over 2 hours drilling the finance system because we wanted to understand from end to... So it's a just one person that sits and approves from top to bottom, or are there multi-layers of checks that is done? And that speaks to the segregation of duties. So all of these things, they are actually practical challenges. Like I said, they are things that I've identified from conversations we've had with some of our agencies in terms of, implementing projects with donor funds. So we observed a lot of them have limited that equip, these institutions are really weaknesses in their system, the more they'll be able and implement an incident I heard of, the person, one of the expenses, and go to claim the expense to be that, oh, the receipt that this guy had to take note of serial numbers. And so that was how the guy was caught, that, oh, wow. So the guy was presenting receipts. He had faked, he had made a fake version of the receipt, but the loophole was now in the standardization of the template in terms of the serial number. So those are some of the things that weak internal controls observe. In terms of internal audit units, in fact, there are some internal audit units that you realize that, oh, the internal auditor is probably the finance person, so there's really no segregation of duties, right? Or the internal audit is reporting to, say, in an ideal corporate governance structure, you're supposed to report to your audit committee, etc. But let's even say the structure is lean. How independent is that internal audit function, right? That's also very important, and that's something we've noticed. This one on procurement practices is a very huge one. And procurement is often seen like, I can give my contract to anybody, but the donor community globally is really big on procurement. Parent is your procurement. They really want to know, are you giving the right people who can carry out the task, or you're just giving people because, well, I know this person? They don't want that. They want that you followed a competitive. Why wasn't it competitive? Was it in terms of timelines? All of those things need to be documented. Even the policies for this procurement processes must be documented. Those are some of the things that, the donor institutions look out for. Weak advanced management, and this is in terms of, I'm giving you money for an assignment, or maybe you're traveling to execute something in another state. How does the institution actually ensure that the money that was disbursed is used for the purpose? Or when the person comes back and is claiming for a refund, how are we sure? What are the processes we've put in place? Is not claiming more than what they've spent. So those are some of the issues in terms of the practical challenges we've seen on the field. Also, weak governance. And I think weak governance cuts across everything. If the tone at the top is right, I believe that all of these challenges can be addressed. And that's why there's really a lot of emphasis in terms of the management of the NGO companies. Who are the managers? Who is the MD? Who are the executive directors? Who are the people at the helm of affairs? Because often the tone at the top sets what flows. So if you, as the MD, you are setting a tone of, well, anything goes, then trust me, throughout the process from will go. So it's really important that the management of these institutions are aware that they have a critical role to play. And it's not just in terms of, oh, I've told them to do this. They are for the outcomes of this compliance and audit functions and processes. So that's very important. So we can move to the next slide. Okay, so when we talk about financial control mechanism, here essentially saying, so how do we fix these issues? We've spoken about the practical challenges. How can we resolve it? And I will say that it starts with, you can start with different elements in terms of the challenges that is um the challenge that is, most priority to your institution. So, for example, if financial reporting is the issue for you, or in terms of building a sophisticated financial reporting process, then staffing and hiring qualified people, or even training your existing staff, will be a major thing for your institution. So in it's this mechanism, these points are placed in no particular order, and that's why it's not like, oh, it's sequential. It depends on where you are and where you see the most gap in your institution. See that your staff need to be trained for donor funds is evolving literally every month, every year, every day. So there's a lot of change. And then to catch up, even the financial reporting standards, I'm glad that would also be later in the sessions. Financial reporting standards is also changing. So there's a lot of change that our staff need to be aware about. And so we need to train and retrain. We need to learn and keep learning. Another point is on internal control, how we must set out, clear approval flows. And that is one of the ways where you would know that, oh, so if something happened at what point did it happen? Who was the person that was responsible for it? That is very important, even in reporting process. When your international communities or these donor funding agencies come around, they want to see the clear approval process. So they want to be sure that it's not just one person that starts the approval and ends it. And this also aligns with, the accounting principles that we are all familiar with in terms of disbursement, ensuring that disbursement is done through authorized channels. So, for example, do you pay in cash or you do transfers? And the transfers, what does it help you with? It helps you so you're sure that it's moving from the person that needs it to, and so that reporting. So all of those things, you leveraging technology is also very important, because with technology now you can then be able to spoil your returns easily, and you can trace this flow. So if it's bank to bank, you know that once you print out your bank statement, it's easier to do your reconciliation. Sometimes you also need to engage independent credible firms, and that's where firms like SAC comes in, so to also help you look at your books and look at your processes and how it can be enhanced. You identify the gaps. Sometimes you are so in your own processes that you don't even see the gaps, not because you don't, because you've been used to the flow, you're not saying it. It takes a pair of fresh eyes to actually see those gaps. So those are important. Accounting softwares, they are really important, and international communities are big on that as well. Having the right accounting softwares is also important in terms of budgeting too. So are you just budgeting because, well, let's just have a budget, or you're actually using it for planning and also for implementing what you're doing? Does it direct your processes and what you do eventually during the fiscal year? Those are some of the things I would recommend on this slide in terms of the financial control. I hope I'm still in time. Please, let's move to the next slide. Okay, so let's talk about some of the compliance the next slide speaks to that, but I want to I Africa require, what the World Bank requires, what agencies like FCDO, USAID requires. They are quite different. So familiarize yourself with those expectations. And sometimes it's a long list of that is attached to the appendices of some of this call for proposals. And also a lot of times we don't spend time reading those requirements. But it's really important because then that's when you can be able to tailor your solutions and also enhance your processes to be able to serve better the objectives of this fund. That's why I said it's important to, familiarize yourself with each donor's um still hear me? I just saw a message that my network is breaking.
Yeah, it was
Yes, but
actually,
it's breaking. Okay.
but it's,
Sorry about that. Okay, so I was talking about how each donor, have different requirements, and we need to they differ. Sometimes within the same institution, the requirement is different depending on the project. There are projects where one of the things you're probably looking for in terms of the corporate result indicators is, or perhaps I should turn off the video. Maybe that would help the bandwidth. Indicators around, maybe gender, maybe capital, private capital mobilization, leverage. Those are the things. So it depends. There are some other projects that what we are looking out for is, access, some during usage. So you need to, as NGOs, really understand the requirement of your of the donor you're seeking to work with or that you're already working with. And I'm not sure if many of us on the call know, but there is a document that was co-authored by the World Bank financial management team and the OAGF office. It's an handbook. It kind of highlights the minimum requirement, right, for donor funding, financial management processes in terms of staffing, in terms of internal audit, will benefit from. So I've attached the link. I'm not sure if the So I would indulge everyone on this call to really be conversant with project documentation in terms of what are the expectations. And most times, like I said, it's in the annex. We need to do our due diligence in that. Let's go to the next slide. Okay, so here I was essentially trying to highlight the principles of reporting for donors in terms of standardization, accuracy and completeness. And these are things we are familiar with. Timeliness, how timely do we render our report? Flexibility. Yes, I said standardization. Depending on the nature of project, the result measurement elements can differ. So how quickly are you able to implement those into your financial reporting? And sometimes it might not even be spelled out, but how are you able to take initiative to actually, report on that? Sometimes there are disbursement linked indicators that will be required before a particular tranche of fund is, disbursed. So how do you recognize this in your reporting? Also, the relevance of the things you're reporting. That's why you cannot be relevant in an industry or in a funding space that you are not knowledgeable about, right? So you need to bring out your game of relevance in terms of as an expert in that space. That's really important. Please let's go to the next slide. Okay, so here I'm not going to dwell on this so much. Thankfully, we have Dr. Deji on the call to do justice to that. But there are some standards that I think are cross-cutting in terms of financial reporting. So the FIRS, International Financial Reporting Standards, the standards for auditing, the FRCN standards as well. Those are important standards to know as you go on about your financial reporting. And NGOs that build internal systems that align with these standards will always find it easier to pass audit tests, to attract new funding and actually scale for impact. Please, let's go to the next slide. This before I share my concluding thoughts, I would just like to give us some insights into, what the future of donor to issues like gender equality, like climate change, like digital transformation. So climate finance in particular, for example, is a growing priority, with donors resources around these areas, especially for those of us in the low and middle income countries. And whilst Africa is one of the lowest contributors to the global emissions, it affects and impacts us the most. And so there's a bit of an emphasis in terms of these areas. So I think as NGOs, we should begin then to rethink and look at our strategy. How do you fit into the picture of this cross-cutting issues that are coming up? Because that's also important. The global donor community wants to see what you are able to do in terms of these areas also before they can then entrust funds. So yes, funding for issues like maybe capacity building, delivering trainings, malaria, those are still happenings. But in terms of emerging issues and how the global economy is, shifting generally, what are the issues that we are seeing? And these are some of those thematic issues. And there's also a big of emphasis around, outcome-based reporting. I've spent, maybe 9,500 and I have 500 left. No, we also want to see, so what impact did it generate? Did it create more jobs? Were you able to measure those jobs? What are the monitoring and evaluation things that you use, tools that you use to measure the impact of that funding? So that's another. So and another thing that I thought would be important to share was in terms of looking at this presentation in terms of the risk perspective. So I was reading a report by the World Economic Forum on the risk they see in the future, in the short, medium, and long term. And one of those risks is actually climate and environmental risk. Again, ties into the global trends that we are seeing in terms of the thematic areas that funding is attract. So we see that climate and environment. So if I were you as an NGO on this call, one of the things I'll be thinking about is, oh, how is my ESG department or reporting looking like? What are the things I'm doing to actually plug into that? Yes, maybe I don't have a funding in that area yet, institutional capacities that I can build now such that when the funding comes, it would almost be like a plug and play. And I think as part of my wrap up, the things I would say, statistics a stricter due diligence, right? So you must professional. Are you, upgrading your accounting systems? Those are the questions I want you to take away from these sessions. How are you building capacity for internationally accepted reporting formats? How is your finance teams, working closely with maybe your operations team to ensure that you are ready for result-based audits? Like I said, M&E is becoming a big part of reporting now in terms of impact and outcomes. So how are we also thinking of incorporating some of these ESG criteria into your procurement? So are you saying that, and that's how to actually stand out in this NGO field. So because one of the things that the donor community is seeing, it wants to see is, if you're an NGO, are you able to say, are you being efficient with your resources beyond the money, but saying, oh, I procure my 30% of the materials I procure are renewable materials, are contributing less to the global emissions. So things like that are the things that you want to think about generally as an compliance. I've spoken about the digital tools. Those are also important in terms of your value for money propositions in financial reporting. What are those standardized procedures you've put in place. So as I wrap up on my final thoughts, I think that it's important that we know that Africa's opportunity to redefine and, change the narrative is here. But as being a recipient of donor funding, which is great, but we can allow our reporting to even put us on a better pedestal. We can allow our reporting to even put us as a better place to attract those funds to come to. And because these funds, they are always like people from other countries, they always want to use some of this. In fact, for them, sometimes it's because of their own tax benefits, right? So there's always, but the question is, are we this funding here? And don't forget that this funding is not only solving developmental challenges, but it's also building our real economy, because then you're probably requiring to employ more people to do some of these things. You are procuring goods, and so it's impacting our economy and helping us to be more productive. So as I close, I would like to say that compliance, it should not just be viewed as a item, so that by use is ripe, I have a band to put them. Let's put the right structure in place so that things can flow to us as NGOs easily. Financial compliance is not just a burden, it's a bridge for deeper trust. And trust is one of the things of it is not too high. But in fact, when you don't do it, the reputation can be higher, because once one of these institutions want to deal with this, it becomes even difficult for others to want to deal with you. And they always ask for history of what you've done. So it's always important to have good history. I was referring to as RCC. It's important for us to have compliance. It's important for us to have control, and it's important for us to report the right way. Thank you so much for listening. And I hope that you've learned too that can be applied in your institutions. Thank you.
Thank you so much. Thank you so much, Mrs. Wumi. We appreciate you. We appreciate you. We appreciate you. Okay, so ladies and gentlemen, whatever questions you may have for Mrs. Wumi, please, you can just put it on the comment section. We are going to have it at the end of it. She will put all the answers together, and it will be attended at the end of this section. Okay, so right about now, we are moving into the second session of our the second session of our meeting, and this session will be handled by a well-respected man, Dr. Mustafa Muhammad Sirajo. Sir, you are up.
Thank you very much, Ralph. Good morning, participants. I want to appreciate Awumi for the wonderful preamble she has given. It has made my work a lot easier, so I can just move into my presentation. We want to look at the regulatory obligations for NGOs vis-a-vis the Corporate Affairs Commission and the FIRS. So the starting point for an NGO operations is the registration, which is done by the Corporate Affairs Commission, provided by Section 845 of CAMA. All NGOs are expected to register with the CAC and are also mandated to file annual returns. So what basically is done is starts from the name. When the name has been approved, the registration continues with documentations. You provide your bank details as well as the year of registration. That is with the Corporate Affairs Commission. Yeah. Next, please, slide. So after registration, there are also filing requirements for the Corporate Affairs Commission. Annual returns are expected to be filed at the end of every financial year, that's 31st December of each year. So a statement of activities of the NGO is expected to be filed with the CAC every year. Failure to do so attracts a penalty of 10,000, which has been recently amended to go along with current realities. So there's a 10,000 naira penalty for every year the failure occurs. That amount is payable to the Corporate Affairs Commission. Yes, next please. Then now we have the tax compliance. As we know, NGOs are non-profit organizations registered to operate in Nigeria in our context. They're expected to operate for public good and as a not-for-profit organization. So, but we ask ourselves, if that is the case, why do they need to be brought into the tax bracket if they are not for profit and they also
Okay, we apologize for the little break. Dr. Mustafa is having a little network glitch. You're welcome, sir.
Thank you. So I was saying you need to register and obtain a tax identification number.
You can turn off your video to avoid the network break.
Okay. To save some. Okay. Okay. So there's a requirement for filing of returns under Section 55. That's at the end of every. Now, let us differentiate between filing returns and payment of taxes. The law is not saying NGOs should come and file and pay taxes. It is saying rather filing returns. You file returns because even though you are not due to pay taxes, there are some requirements. Now, by virtue of what you are and what you do, government is not looking really at how to get you to pay taxes, but rather how to get you to contribute to the revenue generation through various means, by providing data to the government, but through source deductions from some transactions, etc. So that is basically the major reasons that NGOs are also expected to file returns, even though they may not pay taxes, when they are solely engaged in only humanitarian activities as captured in their memo and article of association. So some of the basic requirements for the returns are: one, audited accounts. They're supposed to file audited accounts, tax and capital allowance computations, the statement of profits and loss, duly completed self-assessment forms where applicable, and evidence of payments where applicable. Now, this Section 55 applies to all companies, NGOs, and other companies. That is where we have the self-assessment and the evidence of payment. But where it is not applicable, then it is not expected to be seen in the returns generally. So that is the requirement for under the company's income tax for all companies, NGOs included. Now, the company income tax has a due date of filing.
Okay, let's be patient a little. Just network glitch.
I don't know what really is happening with the. So as I was talking about the deadline for filing, before the end of the 6 months after the close of the accounting period, returns are expected to be filed with the relevant tax office, failure of which also has a penalty provision attached, and that is payment of 25,000 for the first month in which the default took place, and then there's going to be 5,000 each on every subsequent month of the default until the returns are filed, plus an interest of 10% also at the prevailing commercial rate. So that is for now. Where to register? Before now, registration of NGOs was done only at the medium tax office in Abuja, was centralized there. But during the various reforms of the tax laws and the service, and in line with the ease of doing business principles, the registration was decentralized, and now you are able to register in any office, FIRS office that is closest to you. You go there to get your registrations, get your tax identification number, you get your files, and every relevant tax matter will be handled by that office. So it is as taxpayer friendly as that today. Just walk into any office that is close to you at your convenience, at the convenience of the NGO. So that is about the registration. Yeah, so like I said, all NGOs are expected to register for tax purpose and obtain the tax identification number. Now, when you get to the tax office, there's a standard questionnaire that's expected to be completed with some documentations to be done. You provide a copy of the registration issued by the Corporate Affairs confirming the registration of the NGO in Nigeria. There's going to be the MEMAT, the Memo and Article of Association, the constitution or the rules governing the NGO, the list and profile of the trustees, board members nominated. This is to give the tax authority a picture of what that NGO is all about. The trustees, what constitution governs it, what we expect to see in your activities, what we don't expect to see in your activities, which when we see, then they ultimately become separate business activities that may be liable to tax in Nigeria. So that is the registration. Then again, we have the personal income tax, which is governed by the Personal Income Tax Act, Section 19, Sub 1 and Paragraph 13 of the third schedule. requires surpluses of an NGO from approved activities, except profits derived from trade or business carried on, to be exempt from personal income tax. So just like I said now, any activity that is in line with what is set out in the Memo 1 article and the rules, the constitution of the NGO, that is those activities that are purely donor activities, for non-profit purposes, are exempt from the company's income tax. And now we've seen the personal income tax. However, there's also a filing requirement for the personal income tax. Now, the Section 41 of the PIT mandates all companies, including the NGOs, or persons, including the NGOs, to file the annual tax returns. Annual tax returns are to be filed within 90 days from the commencement of each year. So that is up to March 31st of every year. It is expected annual returns will be filed with the relevant tax authorities, states, or the FIRS or the FCT. PE filing is expected to be done by the 10th of every month. Now, let me just tell us something about PE and the personal income tax. PE is actually not a tax per se on its own. Pay as you earn is a collection mechanism. It's a deduction of tax at source for personal income tax. So whatever PE is paid at the end of the period when the annual returns are filed, will now compare what has been collected with the total income generated by that person in that year. And any difference will now be subjected to tax at the appropriate bands and paid. Example is, after the PE, maybe there's an investment in shares. When you receive the dividends, there's going to be the deduction of withholding tax. That deduction is going to be added to the PE deduction to be part of your credits. The main income is going to be added to the total income. Then if there are rental incomes again, and withholding tax has been deducted at the point of payment, that deduction will also be added to the credit. And then the income from the rent will be added to net income. Then if there are income from other sources that has not suffered taxes at all, no source deduction, it will be added. So at the end of the day, by the time we add total income and then we add the total credits, whatever difference seen will now be subjected to personal income tax. So that is why we'll notice there's a separate PE filing date and a separate personal income tax returns date. Failure to do that also attracts penalties, which has been highlighted there. Yes, yeah, those are the penalty provisions there. So let's move to VAT. Value-added tax. Again, NGO activities, humanitarian donor-funded projects are zero-rated for the purpose of VAT, meaning you don't get to pay VAT on humanitarian donor-funded projects. That is, projects that are in line with the guidelines or with the regulations or with the memo and article of or the constitution of that NGO. However, where the NGO enters into a transaction outside its original scope, then it will be treated as any other person, and VAT will apply on such purchases or services they go into. So according to Section 15 of the Value Added Tax Act, there's also a filing provision. VAT returns are expected to be filed on or before the 21st day of the month preceding the month of transactions. So if any transaction that took place in February is expected to be filed on or before the 21st day of March. And whether there are vatable transactions or not, the provision does not exclude any person from filing. So you file and report vatable or non-vatable transactions in the returns. The returns will determine whether there's supposed to be VAT or not. Failure to do that also attracts penalties as specified here. So we can move. Withholding tax or deduction at source. Now, withholding tax has two principles. There's the obligation to deduct tax, and there is the obligation to suffer deduction of taxes. So while NGOs are exempted from the obligation to suffer deductions, they are not exempted from the obligation to deduct taxes. That is why I say at a point, you will see NGOs are like now partners or agents of government. Because when you engage a contractor supplies, a taxable person supplies an NGO. That taxable person is taxable, so that guy needs to pay taxes. Now, how do we bring that transaction into the net? It is by the deductions from the NGO. So when the NGO deducts, nothing touches their activities, nothing touches their funding, nothing affects anything from them, but they now act as agents to government. So whenever there's any taxable transaction that requires deductions, NGOs are expected to deduct those taxes and remit to government. And the beauty of it is that withholding tax also has a filing period. So when you deduct, you're supposed to remit on or before the 21st day of the next month. Now, what that means is if you deduct 10 million naira, we have big NGOs. If you deduct 1 billion naira from a transaction on the 15th of this month, or on the 20th of this month, you are expected to remit that amount with your returns by the 21st of next month, giving you some time to use the money. Why? Because you worked for the government for free by deducting, exposing that transaction, and now coming to give government for free. So government is now saying, okay, we're giving you a small window, N plus 21, T plus 21, before you remit. So you can see there's also something for the NGOs there. Failure to do that attracts penalties also. There's penalty for non-deduction, there's penalties for deduction and non-remittance, and there's penalty for late remittance, deductions and late remittances, which are also all captured under the withholding tax regulations amended in 2024. Okay. Capital gains tax. Gains from disposal of assets is chargeable to Capital Gains Tax Act. However, again, for NGOs where the transaction is strictly for that purpose, they get exempt from payment of capital gains. The gains that NGOs receive from sale of chargeable assets are exempt from CGT under Section 26 of that Act, as long as they are exclusively for the organization's operations and do not result from the sale of any assets that were acquired in connection with the organization's unapproved assets. So what we are just saying is stick to your purpose and you are covered by the entire Nigerian tax laws. You don't get to pay taxes. Where issues come up is when there's a digression from the main purpose. And the tax laws actually impose that to protect the NGOs. Because if you come in as an NGO and you want to be a law-abiding NGO and you stick to your purposes, you don't pay taxes. Another person comes in, registers an NGO and engages in activities outside that and makes profits. You will realize you that decided to do the right thing will be placed at a disadvantage. So the laws are actually out there to protect and ensure there's a level playing ground for all operators within that scope. So there's also a filing date for that, which is for CGT, there are 2 filing dates. 30th June and 31st December, because it's supposed to be, once the gain is realized, then the next thing is to file. It's not a one-time end of the year returns tax type now. So you can file by 30th June. If it crosses June, then 31st December of that year will be when the filing will be due. Penalties are also provided for late filings and failure to file also, as provided in the presentation and in the law. Can we move? Stamp duty. This act stipulates a conveyance or transfer operating as a voluntary disposition to a body incorporated by a special act which precludes from dividing profits among its members and holds property for public benefit. Now, what it's saying is stamp duty is also exempt for NGOs that strictly provide humanitarian donor projects. When those projects are specifically in line with the regulations or the constitution of that NGO, then those activities will be seen to be exempt from stamp duties, from the provisions of stamp duties. Stamp duties also has a filing provision and deadlines for filing, which is supposed to be within 30 days when the instrument is executed. If it's executed within or outside Nigeria, and 30 days after it, or if it is executed outside Nigeria, then it will be 30 days from when it is received in Nigeria. However, NGOs are to remember and to note that once they stick to what they were established to do, the purpose, they are exempted from all of these tax types. However, there is no exemption to filing of returns, because it is only through those returns that it will be established that your activities are actually in line with your purpose. So while the payments of taxes may be exempt, filing of returns is not exempted. No person is exempted from filing returns to the relevant tax authority as and when due. There are also penalty provisions which have now been reviewed under the new laws, the new tax laws that have just been signed into law, which we will see to commence by the 1st of January 2026. Yes, do we? Okay, these are the new source deduction rates provided by the withholding tax regulations 2024, which took effect from 1st January 2025. Most of them were reduced. We looked at the current realities as it affects contracts and source deductions. I will note that the continuous carry forward of withholding tax credits has an implication of eating into the liquidity of businesses. So why would companies continue carrying forward withholding taxes? We realize one of the problems is that withholding tax was actually, the rate is actually a little on the high side. So eating into the not the profitability now, but the income of the business. It doesn't target the profitability, it targets the total income. The total income is going to also suffer some incidental costs, associated costs. So based on that, government in its wisdom looked at it and reviewed the rates downward. So we can say this is one thing we have seen from government that has come down, not gone up. We are used to review rates upwards every time, everywhere. These are things that have come down also for the purpose of ease of doing business in Nigeria, to attract investments and investors and make the environment a little bit more friendlier for the taxpayers to operate within. Yes. Okay. Can we move? Can we move? Are we done?
Yes, sir, that's the final slide.
Okay. Thank you very much. I hope it was impactful.
Yes, it was. Thank you so much, Dr. Mustafa. We appreciate you in a big way. We appreciate you. And I believe our audience are getting value so far. So if you're still with us and you're getting value, you can just put the word value on the comment section just to get a quick feedback that we are all following. All right. You can just type value on the comment section if you're following. All right. Thank you very, very much. We appreciate you, Dr. Mustafa. We appreciate you, and we don't take your presence for granted. Okay, moving on to the final section of our webinar. Ladies and gentlemen, permit me and join me to bring up on your screen none other than Dr. Deji Adeshile, as he will be giving us a brief on the reporting standard. Dr. Deji, are you there?
Yes, please. Thank you. Thank you. I'm here. So, first and foremost, I will appreciate my co-speakers. That's Rumi and Dr. Mustafa. They've done justice to, at least they provided context to my section, and then I will just try to draw few points from what they've talked about. Rumi talked about so many things, but what strikes me most is the word institutional capacity, right? It's very important that we note that donors are free to give their funds to NGOs who they have assessed, and they concluded that they have institutional capacity to operationalize their mandates, right? It's very important. And then that will actually be one of the bases for my section, right? And then for Dr. Mustafa, one thing struck me most is actually the need to have audited accounts, audited financial statements. It's very important because those are the instruments in which both internal and external stakeholders can actually use to assess your performance, right? And then just like what the anchor person said, it is not just demonstrating capacity in terms of the program, right? You have to demonstrate capacity in terms of being able to be financially compliant. And financial compliance cut across so many things. And then one of it is just what I'll be discussing, reporting standards. So if that comes to mind, what are we trying to say when it comes to standard? You know, just like the question on the chat box that actually said, do INGO need to register in Nigeria, right? If yes, what's the procedure? I'll actually say that, when you are going to a jurisdiction, right? There are legal framework that you need to consider before you start operations, right? It's important. And one of it is the reporting standard. We have the Financial Reporting Council of Nigeria, which actually the custodian or the regulator on when it comes to financial reporting standards in Nigeria, and they have prescribed, right, what is needed when it comes to financial reporting. And then it's important to note that it is not just complying with what is expected as to the national jurisdiction, but at the same time, what the donor is expected, right? The donor, they have their own prescribed reporting framework, which I will be discussing in this section as well. So next slide, please, because so much has been said, so I don't need to repeat that. So there are two broad spectrums when it comes to financial compliance, right? We have the legal and regulatory requirements, which is the national outlook for compliance, and we have the donor-specific requirements, which is what we guarantee, right? What will guarantee whether the donor will keep funding you or not, which thanks to me, she has done so much in terms of giving out context as to what is expected from. So I won't be dwelling so much. I'll just do a summary and I'll go to the meat of my discussion. On the legal and regulatory framework, Dr. Mustafa has walked us through what are the requirements when it comes to CAC, what are the requirements when it comes to Federal Inland Revenue Service, which of course in no time they will change their identity due to arising from the new tax law, right? And then what are the requirements when it comes to the Financial Reporting Council of Nigeria, which actually said there are people that have the mandate. Is the institution that has the mandate for institutionalizing compliance when it comes to financial reporting, right? We have the IFRS, we have the what we call the National Financial Reporting Standard, and we have the International Public Sector Accounting Standards, right? Depends on which is more appropriate in the context, right? Then we have, of course, it's very important we mention the part as to the special control units against money laundering, because over time there are cases or allegations, perceptions that some NGOs are used to funnel unaccounted fund and stuff like that. Of course, allegations. It's important to demonstrate institutional capacity through financial reporting. That's why SAC Shegan also has actually put this together to enlighten NGOs to do the right thing going forward. And of course, I'll be sharing some quick fix on how we can quickly address some gaps, because at the end of this section, we should be able to go back and self-evaluate ourselves in terms of, are we doing the right thing? If not, how can we quickly put things together? That is actually that for the legal and regulatory framework. Then on the part of the donor specific requirement, just like what Wumi said, donors, they have specific reporting templates. They have specific reporting regulations, right? Which we have to comply with. It's very important, because if you don't follow their specific reporting template, and one thing we should understand is that this, especially for international NGO, right? They operate in other jurisdictions, right? And then they intentionally design templates in such a way that it will be easy to consolidate at the end of the day. So when you don't follow their template they are prescribed, it will be difficult for them to consolidate, right? And that is why at the anchor, as Raphael said, are we audit ready? Because they have their internal and external mechanisms for checks as well. So when they come for checks, are you ready? Have you used their template, or you've modified their template, right? And you did not inform them and stuff like that. So those could lead to what we call communication gap between the donor and yourself. So it's important that we understand. That is why some of most NGOs, before they sign a letter of agreement with you, they will give you what they call the onboarding section, where they orientate you, when they tell you what and how they expect you, or the frequency of reporting that is required. So it is important we look at, or we onboard their unique financial reporting template. That's one. Then two, they have guidelines too. Just like what Wumi said, World Bank and the Office of the Accountant General of the Federation designed the financial management manual. It's a good way to, right, to look at what the manual is saying, what are the specific things you need to watch out for when you are developing your financial system, such that it aligns with what the donor is expecting. Then the third is the obligations for periodic narrative. No, it's not just the financial statement, right? It's not just financial report. The financial report must be able to speak. It must be able to speak with the context, with their objectives, with their strategies they've set out for themselves. Because budget, because I was talking about what will lead, or what are the processes that leads to generating a financial statement. It's a process. It's not just a statement that it's just not putting figure. It's putting figure that you can defend, putting figure that speaks to their strategic pillars, putting figures that can speak to the narrative, to the context of what, or the agenda of what the mission they are set out to achieve. So it's important that all the numbers we have in our ledgers, in our schedule, in our financial report should have its narrative, because those are the narrative they will be looking at to aggregate and know whether it's fixed or whether they have achieved the specific component of their mandate. So it's important we look at that as well. Next slide, please. So this just demonstrates, summarize what is the minimum element of financial compliance for NGOs, right? If you are saying, okay, if I want to develop a financial statement, if I want to generate a financial report, what are the things that must be in place? I try to, there's something called internal control over financial reporting. This is an initiative being pushed by the Financial Reporting Council of Nigeria, right? Just like in my introduction, I said it's important. And another point I want us to understand is that there are some mandatory requirements behind you, right? That you need to be conversant with, because it's important to know what the Financial Reporting Council is saying as to financial reporting within an organization, and in specific, the NGO in this case, right? And then the next thing we need to understand is the fact that there are core elements of financial compliance that we must follow, right? All of these things must be institutionalized within your system such that it will be easy to generate a financial report. Like I said, a financial report is not just putting numbers in a document and say that is it. In fact, when the auditor comes, that is why I pick a point from Dr. Mustafa's presentation. He said before you can even be tax compliant, you must have an audited account. You must have an audited financial statement, and which means that your financial report that will be generating is not, it shouldn't be hanging there in terms of not having narrative, not having the controls that you put in place before you generate the financial statement. So what are the minimum things we expect to see when you want to generate a financial system, a financial report, sorry, is one, there must be a clear financial management system, which means on the minimum, we should have what we call the chart of accounts, which must align with the donor requirements, right? What is chart of account? Chart of account is just saying the name, right? The heads, right? That you accumulate cost. Take for instance, you have you're embarking on, let's say, advocacy and training for women in let's say in FCT. That is an action, right? Then under that, you can have transportation, you can have communication, you can have a cost head for honorarium for expert and all of those. So you must agree those heads. You must align those heads with what the donor expects. Just like I told you, it is not enough for us to say, okay, this is the way we are doing our things. Yes, if the way you are doing your things is the way you want to continue, it is good to communicate that during the onboarding section, because it's possible that your NGO is not the only NGO that they are giving funds to implement. So if you fail to use their prescribed chart of account, when they are consolidating at the maybe global level or at the national level, let's say for instance it's a Nigerian NGO and they choose to, sorry, it's a Nigerian donor, right? And they choose to have NGO in each of the states, right? So if everybody fails to use the same chart of account, it will be difficult to consolidate. That's why it's important that during the onboarding section, understand or ask question. Do you have a prescribed chart of account we should adopt, or should we adopt ours? So those clarifications will guide you, right? It's to avoid the communication gap or doing the wrong thing, or not doing what is not doing misaligned thing or chart of account at the point of project close out, right? It's important we implement chart of account which align with donor requirement. Then secondly is to use donor compliant accounting software, just like what we said, right? It's because some donors they are particular about the accounting software because they already implement that from their own end. So for seamless integration, they will want to prescribe an accounting software. So it's important during the onboarding section, you ask those specific questions, and if they give you the freedom to use yours, it's okay. But it's important that we ask and we have an accounting software which the donor is comfortable with. Then it's important that we carry out real-time recording of expenditures. Why we are emphasizing on expenditure is because as an NGO, we don't expect you to have other means of income or revenue apart from donor funds, right? And that was why Dr. Mustafa said that if you are doing other activities, doing business or generating income from trade, from anything other than humanitarian, it means that you should be seen. That means you'll be seen as making either profit or loss. And if you make profit, to be subject to company income tax. But if you are your only source of income, and that's why you have to stick. If you are for not for profit making or not for profit making, just stay on that. Because if you stay on that, it means that your only source of income will be from donor, right? And then what you are expected to do is to ensure that you track all the expenses, right, you are making from their funds. Then the last is the segregation of duties. We said so much about what segregation of duties is all about. It means you have to demonstrate that you have institutional capacity where there is checks and balances, right? So the finance officer different from procurement officer and all of those things like that. It's important that you demonstrate that you have people who can push, who can operationalize your system for you in a check and balance manner. Then apart from these are just minimum context, right? We can always provide additional context based on the need of a particular NGO. But these are just a generic or the simplest thing that would demonstrate that you are ready, you are ready, you have a capacity to operationalize donor funds. Then the other part of it is budgeting and financial planning. It's important. When donors, they take budgeting and planning very seriously, financial planning very seriously. Because when they are setting out, they have what the activities they want to carry out. They have attached financial implication to those activities. That is the next step for them is now let's identify who we implement. I can take an example. Let's say, for instance, a donor in, let's say, in the US already established that they want to carry out this activity and they want to achieve this outcome. They have a budget, they've developed their budget, and it's approved by their board at that level. The next is, okay, how do we come into Nigeria? Let's say, for instance, they want to come into Nigeria. How do we come into Nigeria? Okay, let's try to identify some local implementing partners, right? When they identify some local implementing partners, that is when some of the NGOs on this call, we come on board. They will check your institutional capacity, how ready are you, how transparent and accountable your framework is. They onboard you, right? They deploy the fund to you, and you carry out those things on their behalf. So which means your source of income or your source of revenue, right? Your source of inflow is from those donors, is from those specific donors. So it's imperative that you have, and of course, they won't just give you the fund like that. They will ask you to come up with a budget, or they work with you to come up with a budget. And that budget is what is going to be approved by them, right? And what they will only be doing is to monitor the spending. And that is why I said it's important that we have a real-time recording system that will facilitate that will justify the accountability and transparency of how you have been deploying the funds. So developing budgets, right, and monitoring the burn rates monthly is very important. Then the next is you should try as much as possible to avoid cost overruns, right? Umi has said so much on this, right? So it means that for everything that you want to spend, it must align with the budget they've approved. Else, it will be seen as when there's time to check, right? When there's time to review what you have done, those costs will be classified as what we call non-eligible costs, right? It means that it's either, and of course, in the letter of agreement you sign with them or delegation agreement, as the case may be, depending on the donor you are talking to, they would definitely ask for a refund. And of course, that is a signal, that's a red flag. And they, of course, which might lead to them withdrawing or freezing the fund and all of those. Then, of course, it's important you establish system for cost allocation across budgets. And all of this will be addressed when you have a structured budget that is being approved. And all of this are not cast on stone, right? Because it's important. Sometimes it could be that you just have to spend some funds spend on some activities that weren't budgeted for. That is why it's important that communication between the NGO, implementing NGO, and the donor should be established, and of course should be followed up so that there's no communication gap, and which will trigger a red flag at the point of coming to check or monitor and look at what you've done so far. And on the procurement, right, just like what has been said, procurement compliance is very important because you need to demonstrate transparency, competitive bidding process, and all of that in your spending, right? And of course, maintaining procurement records is very important. I'll give you an example. Sometimes, of course, doing one of those review we've done, I was fortunate to participate in. You see that some NGOs won't naturally want to follow the procurement procedure, and all of these guys, yes, sometimes you think that the donor is not watching, right? They are actually watching because they have an approved document. They've established the threshold, what you should follow. But you keep submitting reports. Yes, they might not want to flag it at that time, but at the closeout meeting or as part of the closeout procedure for the project, that is when they might now want to look at what you have been submitting and how you've been able to comply with the procurement procedure which you've established or they've established that you follow. So it's imperative that we look at that and then look at what the donor specify, right? Some donor will tell you, when they look at your system, they will say, okay, your system is okay, you can follow your procedure. But however, you must demonstrate that you actually follow that procedure as you have prescribed. On the internal control, right, parts, the minimum, there are a whole lot of procedures or standards on internal control, just like the one I told you about. There's initiative being pushed by the Financial Reporting Council of Nigeria, which is internal control over financial reporting, right? Those are initiatives to demonstrate that and to pass the message that it is not just financial reports, right? You have to demonstrate that the financial reports you are going to generate, that you are presenting, there are basis for them, right? And then there's another one called the the integrated framework of the Committee of Sponsoring Organization, we call it COSO framework. It has 5 pillars. What are the pillars? We have you establishing a control environment. Control environment means that what is the internal environment all about? Just like the word segregation of duties, it's an indication that you are ready or you are demonstrating that the environment is ready to produce a sound financial report. It is not enough, right, to have a financial report, but you have to demonstrate that there is a control environment in place that will drive a reliable, robust financial report, right? The next is what we call the risk assessment. That's the next pillar under the Committee of Sponsoring Organization framework, right? Is what we call the risk assessment. Risk assessment is the new and one of the important mechanisms for generating a sound financial report, in the sense that it ensures that you are always on the lookout for possible red flags. And how you're able to mitigate those red flags, we demonstrate that you are going to manage donor fund properly, especially in the area of avoiding cost overruns and ensuring that your spend is in line or is in sync with the approved donor budget. Then the third is the control activities. Yes, you have the environment, you have the risk assessment framework. The next is, how do we then ensure that just some control activities are performed to demonstrate that the environment and the risk assessment mechanism align, right? And the fourth is the information and communication. It is not just enough to have everything in place. You have to be able to pass it to those that we implement, right? From bottom level to the top management level, or the top management level to the bottom. And of course, we have internal communication and external communication, right? The internal communication could be your staff, everyone within the system. And why the external is, of course, because your control cut across both your people inside and your people outside, right? Like what Dr. Mustafa said, tax authority. It's very important. In fact, one of the things that the donor will always watch out for is how compliant are you when it comes to tax. We understand you are in for humanitarian, you are in for to address humanity issues and all of those, but it's not enough not to. It is not so good when you don't look at the tax implication of all of the activities, all of your actions. Because in the first place, some of these funds could be from taxpayers of another country, right? Or some funds that are donated by people who are interested in the cause they are trying to address, right? But it's good to always demonstrate that we are compliant. There are some things that we are meant to have complied with, which we need to demonstrate that we have complied with. Then the last part of the pillar under that integrated framework is what we call monitoring. Monitoring is very important. Just like supervision, you demonstrate that you are monitoring the activities and the outcome, because the donor, they have core mandates, right? And then when the numbers are out, the numbers which will be presented in the financial report should naturally speak that they have achieved those mandates with those spends they've made, right? So it's important that we look at that. And in addition to the integrated framework of the community of sponsoring organization, that's what we call the COSO framework, we have some other global standards from the Institute of Internal Auditors, right? So there are a whole lot of standards, even from our own Institute of Chartered Accountant of Nigeria. There are standards, right, that guides us to know what and how we should go about institutionalizing internal control within our financial reporting system, right? So I'm just trying to take my time to give us what are the things, the minimum things we need to watch out for. Because some of us could just be the founder of NGOs, not really the finance officer, not really the finance director. But it's important that we understand that if the minimum requirement for a financial system, a sound financial system, and all these things are put in place, the system itself, which that's the coordinating and all of those things, then the budgeting and financial planning, and donors, right? Donors do not play with budget and financial planning, right? And the procurement process too must be sound, and you must demonstrate that you have internal control to check all of these things. Next slide, please. Then the monitoring and monitoring, reporting, and audit readiness. Like I said, I will be speaking on some standards, and I will just tell us some red flags, right? That we need those standards will help us to address. Take, for instance, we have what we call International Accounting Standard 1, which is on presentation of financial statement, right? What are the minimum things we need to have in those financial reports that we claim that we want to? One is we need to have what we call the statement of financial performance, right? The statement of financial performance and the statement of financial position. I'll break it down. Financial performance, if we're in the for profit making outfit or organization, statement of financial performance speaks to what we call your income statement, right? Which says that you have to tell us the source of all your inflow, then track all the expenses, right? At the end of the day, your inflow and your outflow, that's inflow, your revenue, your income, and then you have outflow, which is your expenses. The difference could either be surplus or deficit, right? If it is surplus, how do we treat it? If it is deficit, how do we treat it, right? So, but basically, your statement of financial position, performance, sorry. So, statement of financial performance speaks to your income and expenses, right? Then when it comes to the other part, which is the statement of financial position, It's just telling you those are the conventional, what we call a balance sheet, right? It shows your assets and your liability, right? But in that standard, which is International Accounting Standard 1, right? There are some red flags. There are some red flags over the years that NGOs will naturally we don't always pay attention to. One of it is the question of how do you treat the unspent donor funds, right? How do you treat the because if I come for, let's say, financial review now, and I try to ask questions as to, or we try to interrogate the system and say, donor gave you, let's say, I'm just saying, hypothetically gave you 1 million naira, and at the end of the year, you have only performed, let's say, 80% of it, which means you have spent 800,000 naira, left with 200,000 naira. How do you treat that in your financial report, right? Let me tell you the mistakes most donors, most NGOs do commit, right? The mistake they do have is the fact that they will see those 1 million as income, forgetting that they have not performed. Their level of performance is just 80%, right? So because the expectation is that when you have not performed, right, you don't recognize the entire 1 million as your income in that year. You only recognize the level of which you have performed, which is 800,000, and the remaining 200,000 in your custody, right? She's a liability because you have not performed. Take, for instance, what is happening in the US, where they have to start canceling a whole lot of obligations because of the new policy and all of that, right? So if that is the case, your balance sheet should speak. Your balance sheet should speak to the unspent donor funds, right? So that is one of the red flag when it comes to applying International Accounting Standard 1, which is the presentation of financial statement. Another standard is International Accounting Standard 16, which is on property, which is on property, plant, and equipment, right? It talks about how you treat donor-funded assets, right? Those assets are not yours. How do you capture, how do you measure them, how do you recognize them, and how do you report them? How do you disclose them, right? So those are things that and of course, how do we do that is how we have something called fixed asset register, right? Fixed asset register will tell us how you depreciate, how you carry out impairment tests, and all of those. So those are minimum or regular or most often mistakes or red flag you see when you go to review the financial system of NGOs, right? Improper classification of revenue, right? 2, non-recognition of unspent donor funds. 3 is even the assets that they have. How do you have a fixed asset that track all of those things? So, and we have so many other standards, but I will only restrict myself to all of this, just these 2 standards because of time. And of course, we are open to further engagement, right? That will give more context to how you apply this. But financial reporting standard generally is one that submitting a financial report, which of course is required donor format, right? It could be monthly, it could be quarterly, and it could be annually, depending on the letter of what is in the letter of agreement, what clauses in the letter of agreement, 1, or if it's delegation agreement, depending on the donor in question. Then 2 is that you must reconcile with supporting documentation and bank statement. It's important. Just like one of what Umin said, you have to demonstrate whether your expenses are done on cash basis or through transfers or wire transfers. Most NGOs are more comfortable with bank transfers because it shows bank statement or working or doing bank transfer. Bank transfer. It's a third-party evidence on its own when it comes to when they come for checks, right? Then lastly, under financial reporting is ensuring timely and complete narrative reports that explains financial figures, right? It's not just the figures, just not the numbers, but you must ensure that you have description, you have narration for all of those your figures that you'll be throwing out in the financial report. Then on the other part is the fact that we should be ready for what we call external. We must have an internal audit framework in place, and ultimately as well, you must be ready for what we call external checks, external audits, right? Of course, the external audit could be a donor-led project audits, which depending on the frequency or what they have actually agreed, right, with you, then be ready for what we call the organization-wide statutory audits. And that is the point Dr. Mustafa was trying to emphasize, that for you to demonstrate tax compliance, the start point for engaging with tax authority is that you must have audited financial statement or audited report, as the case may be. But of course, there are some discussion around who should have an audited account based on CAC requirement. But for NGO, by default, you should be able to demonstrate that you are audited, because those funds that you are managing or you are spending are donor funds, right, for specific or defined purposes, right? Then lastly on that is that we should be able to establish internal audit function or use independent reviewers to ensure ongoing compliance. This is important. That is in line with all of those type of standard we can use to operationalize our internal control functions or our internal audit functions. Next slide, please. Then aggregating on the way forward, right? One is that we need to understand that we have to have mechanisms for risk management and anti-fraud in our system. We have to develop a policy that prevents fraud, conduct periodic risk assessments, train our staff on anti-money laundering. It's very important. Train our staff on donor code of conduct and ethics is very important. Train our staff on conflict of interest disclosure. It's very important, because you think these donors are not monitoring. They're actually doing that because the funds that they have given you, they have aggregated it from diverse sources. From diverse sources, which they must justify, because they too, they might likely, or they will go back to those people that have contributed to their own purse as well, to say this is how the money was spent. And it might not end there. Those people might even come again to do their own check to be sure that what they have claimed that they have done was it has actually been done. So it's important, and of course they will do some other checks which might not be disclosed to us. Then on the part of what are the consequences of non-compliance? The key thing is that the fund might be suspended or called back. It might lead to delisting from donor rosters or backlisting. Organizational reputation is damaged. Legal and tax implication is invoked. So those are the things. And the quick fix, right, is fact that we need to start adhering to donor rules and financial templates is important. We need to adhere to build capacity on cost principles and documentation best practices, because the documentation will give us basis for extracting narrative from how we have spent the funds, right? Then lastly is on the budget monitoring and grant closeout procedure. It's important. So those are the quick fix on how to demonstrate capacity, because back to what we said, which I told us, like it's one of the bases of which my section is structured, is that we must at all times, we must always demonstrate that we have the institutional capacity to deliver on the mandate of the donor. And how can we do that? And those are the quick fixes I've listed. Demonstrate that we are ready to comply with the rules and financial templates and all of those things. Next slide, please. So to conclude, the takeout from all of these all of my discussions is the fact that we should not just see financial compliance as just ticking a box, right? We should see it as a strategic advantage that we can leverage to demonstrate transparency and accountability, and to get more funds from donors. And just like what Tumi said, it's credibility. There are so much of credibility issues, distrust on how NGOs are deploying their funds, right? And it's now time for us to have a deeper reflection on how we'll start doing things more rightly. I'm not saying we might not be doing it rightly, but let's do it more rightly in the sense that how can we further institutionalize financial compliance within our organization? So on this note, say thank you for listening, and then I'll be glad to take questions or need for more clarification. Thank you.
All right. Thank you very, very much, Dr. Deji. This was an amazing session. An amazing session. Okay, just to get a quick feedback from each and every one of us. If you got value so far, please just go in the chat box and type value. If you got value so far, you go in the chat box and type value. Now, while we are doing that also, we are now into this question and answer segment. Okay. So if you have a question you would like to ask, for sake of time, we're going to be taking at least just 3 questions. For sake of time, we'll be taking at least 3 questions. So if you have a question, you can just raise your hand at the participant. I'm going to unmute you, and then you ask your question, probably directed to any of the speakers, and then the speaker is going to attend to you quickly. All right, so let's do that quickly. If you have a question, you can raise your hand. Although the question in the chat box by Pretty KG has actually been attended to. So Pretty KG, kindly confirm if your question has been attended to also on the comment section. Okay, so I have a question from Abimbola from the chat box. Is it okay to invest idle funds? Is it okay to invest idle funds? So do we have an answer?
Can I take that?
Yes, please. Yes, please.
Okay, good. Thank you. You see, the way to answer this is, let's first of all look at what are the clauses, or what are the conditions, right, in the what we call the letter of agreement we have signed with the donor. Perhaps they will tell you how you should treat idle funds, right? And of course, you report back to them based on the frequency of when you should be reporting to them. It could be monthly, it could be quarterly, it could be annually, right? Depending, but most of them will always do a quarterly or monthly and quarterly. They don't allow monthly, annually in its sense. Idle fund. Let's ask ourselves, what is an idle fund? Idle fund is they've given you a budget, or say you want to deploy an action for, let's say, 1 million naira, right? What that means is that if you are able to work with the approved budget, you are not expected to have an idle fund. You have an idle fund, let's say you are unable, right? Unable to what? Unable to fully implement, right? The best practice is to notify them and to what? Be ready for a refund if you're unable to continue with that program. But if you're able to, because if you invest it, the return on investment, you're already doing business with the money, right? And that means you are now derailing from your core mandate, your core agenda. So it's better because you are not, by default, you are not expected to have an idle fund, because if you say you are going to implement an action for 1 million naira, you are expected to utilize that 1 million naira for that action. If you're unable to finish that action in that one financial year when you need to report, then that should be your first priority in the following financial year. You deploy it. But in the event that, let's say, for instance, you have shown or you know that you cannot go further with this action, then it's best to notify them and refund them. But if you invest it, the return on investment means you are starting doing business with their money. That is a red flag. Thank you.
Okay.
So my other contribution from other panelists, please. Let's have feedback from Wumi, Dr. Mustafa. Please let's share your thoughts as well. Thank you.
I'm happy to jump in. Thanks so much, Deji. You've covered it elaborately, and thank you to Dr. Mustafa also for a very comprehensive delivery. So I'll just add to what Deji has said. You're not expected to have idle funds, especially because some of these funds are in such a way that they are matching your deliverables. So they are not given to you just to sit there. They are given to you, perhaps they are staggered based on the milestones that you're expected in 3 phase. The project is when phase 1 some procurement you're expected to do, and also in terms of hedging against, situations, etc. You're not expected to go and invest that money or see that money as idle. You start your procurement as you've indicated in your time plan and milestone coverage. So like Deji said, you're not ideally typically expected to have idle funds because most of the funding is disbursed in
Okay, we can no longer hear Mrs. Wumi anymore. Okay,
Can I come in?
Yes, please. I was about to ask you.
Okay. If what Dr. Deji and Wumi said could not be done and you end up investing idle funds, then please be ready to report that to the tax authority and ensure all relevant taxes are actually accounted for from that. That is from the taxman's point of view now. Thank you.
All right. Thank you very much. Thank you very much, Dr. Deji. Thank you, Mrs. Wumi. Thank you also, Dr. Mustafa. So I'm going to be asking Angela to unmute. So you direct your question, just go straight to the question and then direct it to maybe any of the speakers or so. Angela, you're up. Hello, Angela, are you with us? I'm asking you to unmute. Angela? You are unmuted already. Kindly go on. Your volume is very low. It's very low. If you are using a headset or a speaker, you just disconnect from it. I can barely hear you, Angela. If you're using an earpiece or a Bluetooth connect, you just disconnect and then speak directly to your device. Okay, Angela, while you actually sort that out, please, once you, or probably just type your question on the question, okay? While we take the next question. All right, so while we take the next question. Okay, so okay, Angela's question is up now. Are NGOs subjected to self-assessment? Are NGOs subjected to self-assessment? Okay, I have Dr. Mustafa responding to that. He responded with yes, they are. Okay, so if you're okay with that, Angela, you just respond to. Then I have a third question from Ernest Ike. What happens where 3 years project is funded once? What happens when 3 years project is funded once?
Can I take that?
Yes,
Can
please.
I go first? Then Wumi can and my other colleagues can actually. So the question is this: 3 years project funded once, in what context? Let me share my understanding. Let's say, for instance, you have 3-year activities you want to carry out, and in year one they do full disbursement, and that was why I said, when you see, let's say, for instance, the full disbursement is 1 year, and you're expected to do 500 in the first year, 200 in the second year, and 300 in the third year, right? Some mistakes most NGO will make is they will see that 1 million as income in that first year, right? And then in the second year, they will now start reporting deficit, whereas that is not the right accounting treatment, right? The right account, yes, they can disburse. That's the choice of the NGO. That is what they have actually. That's the choice of the donor. Sorry, right? So it is responsibility of the NGO to demonstrate that this fund I've received in year 1 is for 3 years, right? So if you receive it in year 1 for 3 years, what it means that to the extent of activities you have carried out in year 1. It's just what we call the matching concepts and the periodicity, right? Which means that what is the period you have spent, and you'll be able to match your inflow with your outflow. Your outflow in this sense are your expenses. Your inflow in this year is what you have recognized as revenue in that financial year, right? So, and for in the context of an NGO, what you are going to report as what you've earned in that year's revenue should be a direct implication of what you have spent, right? Because NGO, you are not meant to make profits, right? What you have said you are going to spend, if you spend it and with other things or something like that, then you should at least have a marginal surplus or a marginal deficit when you've injected depreciation and then bank charges, which you have not accounted for in the first place. So yes, it can be if that is what you have signed with the donor, and donor give you the fund, but it's your responsibility as an NGO to ensure that you properly report or disclose that fund in your financial reports, right? In this case, we have the financial performance, system of financial performance. You only report what you have spent in that year, right? Those unspent, you see them as liability in your financial position. So that is just my response to that's the clarification I want to give to that. Wumi, I will appreciate your insight, Dr. Mustafa, as well, please. Thank you.
Okay, can everybody hear me?
Yes, please. Yes, I can hear you from my hand anyways.
Can hear you too.
Excellent. Okay, thank you. So Deji, you've spoken well in terms of the matching concept, and I think when you're probably paid, it's quite a rare situation to in the last couple of years. For example, a project that we have with a very big development finance, we thing at once. It's also a risk consideration for even the donor. So most times you rarely find donors give you all at once. They often match it based on the expenses they foresee, based on that both agreed to. Even a staggered payment, but in cases where you are then paid at once, I think that then calls for some innovation in terms of how do you still utilize it for things like use those monies to lay the foundations for the subsequent phases of the work. So for example, Deji during his presentation was talking around cost overrun, avoiding cost overrun. How can you avoid cost overrun, especially things will then be maybe a bulk purchase, bulk procurement, etc. So those are the things that I think that kind of institution will begin to think. So you have to be innovative such that you are not investing in yourself in the tax net unnecessarily and then expose even your reporting processes. That would be my addition. Thanks.
Okay, thank you very much. Any addition from Dr. Mustafa?
I think that suffices.
Okay, thank you very much. So Ernest Ike, there you have it. I believe your question has been answered and attended to. And the final question we'll be looking at here would be from Abba Andrew. What are the common red flags donors look for during audit, and what key elements should we look out for in a donor agreement or contract?
thank you for that question. And then I've mentioned some of the red flags, right? One of the red flags is the one I've actually mentioned, right? If I pick your financial reports and I see that you have unspent, you have your cash balances, right? Which ought to be the balances in your bank account and all of those. I can see so much unspent funds, right? And then I pick those unspent funds and I pick your balance sheet, right? In this case, statement of financial position, right? And I can see that you have a liability that will speak to that excess of funds you have in your bank account, which is a red flag. Because the question is that how have you been able to accumulate on all those unspent, cash, so much cash balances in your bank account, right? So that was why I said it's important. There's what we call matching concepts in accounting, right? In financial reporting, right? And then that speaks to how your financial report should look. So those are one of the key red flag. I'm not able to account, right, for unspent donor funds, right? That is one. Then secondly, in the letter of agreement you signed, it's very important. No donor will give you money without the letter of agreement. Or if it's in the EU space, they call it delegation agreement. It depends on you understand any name they call it, but there must be something that binds you and the donor. And oftentimes they will specify what you need to comply with, the minimum documentation for each type of transaction. Some will even go as detailed as giving you what we call chart of account. Chart of account is just the title of the expenses you should spend on. Some will tell you don't use our money to pay staff salary. It will be there. If you go and pay staff salary and you report it, it's what it will be classified under non-eligible spending or cost. And non-eligible spending will either in the agreement, they will say that you will refund, or of course, it's a red flag for not to continue with you. So it's important that you watch out for those clauses, let it be properly interpreted. And they are not something that NGOs should not be able to, but oftentimes is that we just do and then ignore what the agreement has asked you to do or the way the agreement has specified you should do it. It's important because they are the one, they know what they have seen to aggregate those funds from multiple sources. And why they're able to get those funds is because they have an agenda, they have different actions, they have costs they want to address, right? And then you must demonstrate that you are spending to achieve those objectives they are set out to achieve. Some NGO would have done or closed or get approval from donor as far back as many years ago before they will now start implementation, because most of these guys, they have plans, they have agenda, multi-year activities they want to carry out. So it's important that we look at what the agreement is saying, but the minimum was what I've shared, right? Maybe at the end of the day, the anchor can still collect the email address of participant and share all of this, all our slides for reference. I wouldn't know how that will play out. What is important, one is how explaining how funds were accumulated, right, in your bank account, and then we cannot see who or whether you have not properly accounted for unspent donor funds under your care. So that's a very big red flag, right? Another part is when they do detailed tests on your procurement process, they see a whole lot of collusion, they see a whole lot of conflict of interest. That gives them, in fact, that's another red flag. So it's important you must show transparency in your procurement process. You must demonstrate that you have a budget you followed. You must demonstrate that you have duties are well segregated. It's not enough to have good intention on how to address humanitarian challenges. It's another way to show that you have a strategic leverage in terms of having sound financial compliance system in place. So those are just my little contributions to address the question. Thank you. Thank you.
Okay, thank you. Thank you very much, Dr. Deji. Mrs. Wumi, do you have a contribution to that? And also Dr. Mustafa?
Yes. So I believe that also said the key elements to look out for in a donor agreement contract, and I'll just add my bits on that. So I think we've started off by saying what are the disbursement linked indicators in terms of that is important. What's the payment schedule like? Would they like you to execute first and then pay you, or we pay and then immediately and report? So you need to understand that also the currency, of the transaction, the on use of fund, which relates to the last question around the idle fund issue. So did they specify how you are to use an idle fund? Or you hold it, or what's the treatment like? So those are very important. And then I think it's also important to the contracting in an evaluation climate, ESG things coming up, even to intellectual property and also termination of contract. So for example, there are contracts. Imagine if an NGO had signed a contract when a dollar to naira was about 500 and skyrocketed and went to about 1,500. What provision does your contract have those? So I think those are very important, and having that macroeconomic perspective agreement is really important, especially for country like Nigeria. Thanks.
All right, thank you very much, Mrs. Wumi. Dr. Mustafa, do we have a contribution, final contribution?
Okay, yes, let me say a little on that. You see, one of the red flags is also the issue of tax compliance. They want to see your level of tax compliance because they need to protect their integrity. Countries outside, they don't joke with tax matters. They don't take tax matters lightly. So a non-compliant NGO, I think, may easily get the blacklist, can easily get blacklisted. I can give an example of FATCA, the Foreign Account Transaction Compliance Act of the IRS of the United States. It's a legislation they did that any taxable person in the US that has an account anywhere in the world, that country is expected to report transactions done in their accounts. So they don't joke with anything to do with taxation. And I'm sure tax compliance is one of the key issues that they really need to work on to ensure they are not blacklisted. Thank you.
All right, thank you very much. Thank you, thank you, thank you. So this is a big thank you to all the speakers. And at this juncture, I'll be calling on a colleague of ours who will be giving us the closing remark. And finally, a little thing for us all. Now, also for those who have registered, just be aware and check your mail. The materials will be sent to you to your mail. And also, if you're following us on our WhatsApp channel, materials will also be dropped on our WhatsApp channel to help most of us have more access to some of these materials and more information. So at this point in time, I'll be bringing in Miss Dami, who would be giving us a closing remark for the firm. Damilola, are you there?
Yes, I'm here. So on behalf of the entire team at SSC, I want to sincerely thank you for joining today's session on ensuring financial compliance for donor-funded projects. To our esteemed facilitators, thank you for the depth of insight you shared. And to every participant, thank you for investing your time in this important conversation. We trust it's been both enriching and actionable. I would like to briefly introduce the firm behind this webinar, SAC. SAC is a multidisciplinary professional service firm based in Nigeria. offering tailored solutions in audit, tax advisory, accounting, and regulatory compliance. As a member of the Impact Global Network, we leverage international best practices while remaining deeply rooted in the local regulatory landscape. Our work with nonprofit organizations is focused on strengthening accountability, improving donor confidence, and building the system needed for long-term sustainability, from financial audits to grant management and capacity building. We partner with NGOs to build sustainable governance systems that enable long-term impact. At SAC, we do not just help you comply, we help you gain clarity, confidence, and credibility in the eyes of stakeholders and regulators. To learn more about our services, please visit our website at www.ssc.com.ng. You can also stay connected with us on our social media handles. On LinkedIn, we are Segun Awosoya and Co. On Instagram is at segunawosoya.co. You can also follow us on our WhatsApp channel. The link has been posted in the chat box. You can also reach out to us via email at info@sac.com.ng, and we'll be happy to continue this conversation with you. Once again, thank you for being part of today's session. We truly appreciate your time and participation, and we look forward to collaborating with you. Also, a feedback form will be sent to your email along with the webinar materials and a link to the video YouTube recording of today's session. Thank you and enjoy the rest of your day.
Thank you so
Thank
much.
you. Thank you.
Thank you very much.
Really?